If you want to make quick profits trading Bitcoin, you need to stop using the 1-minute chart. I'm about to show you the 10-minute time frame is ideal for scalping, and I'll reveal the one indicator I use that is the closest thing to predicting the future I've ever seen. This isn't a long-term strategy. This is a system you can use for a few hours a day to actively grow your account. All right, so let's get into it. Stay off the 1 minute, go to at least the 10-minute. The 10-minute is the ideal, in my opinion, ideal for short-term trades and scalps. Totally liquidated when those things happen by having a stop loss in place. So even on your scalps, yes, use a tight stop loss. You're expecting it to go up. I personally don't do conditional orders that often, very rarely. I mean, I have a conditional order at like 2 cents for Bitcoin for all the Bitcoin that exists, but I doubt it's going to hit. I think shorting the top of a downward trending channel is better than longing the bottom. You could long the bottom here thinking that it's going to go all the way up to the top, and it doesn't. It just comes lower. And then maybe it'll eventually get to the top again over here, but you're so negative right now because you went long here that you have to wait a long time for that to come back above your entry. In a downward trending channel with lower highs and lower lows, in a bear market with an overall downward trending channel, longing is dangerous. If I was just scalping, I would be saying, okay, the best scalp would be shorting the top of the downward trending resistance. Me personally, I don't see a scalp set up yet. I would wait, bouncing on the bottom with a little bit of a W pattern. If I zoom in on the 10-minute time frame, this could indicate that we're going to go up. So should I go long? You might be saying, good, but remember, the overall trend is down, so we're being pulled down, and even when we bounce to go up, it's being pulled down further. So we have lower lows and lower highs. That's why I think shorting the top is better than shorting the bottom, because longing the bottom, because you could long the bottom here thinking that it's going to go all the way up to the top, and it doesn't. It just comes lower. When the music stops, if you keep playing long enough, you will eventually not have a chair. You got to just protect yourself there by not entering at the wrong times and sitting on your hands and waiting. So me personally, if I went down to the 1 minute time frame, looking at this, it does appear, there's that W I was showing you, does appear that we have a big W on the 1 minute. W's normally break to the upside, but do they? Well, when do they and why do they? Well, they do if we're bouncing on support. The lines get a little wacky. When I draw my lines on the daily and then I go down to the 1 minute, they're not really where I had them. So let me just go up to the 1 hour and show you. If you don't have Market Cipher, guys, this is very good for scalping. Market Cipher B down here. If I go down to the 10 minute, you got green dot, red dot, green dot, red dot. You can see this green dot down here on the wave pattern. This is a wave. Looks like an upside down wave cresting. As soon as it crests and that green dot goes green, the price pumped. This was pretty much right here. That would have been a scalp. Now, when would you get out of this? How do you know you're done and it's not going up any higher? If you'll notice down here, it hit a peak and it crossed over the moving averages, but right there, look at the green on the RSI turned red, and we have a red dot right here. You get out or short, reverse the position, boom, write it back down. Market Cipher has to be the closest to predicting the future that I've ever seen. I have yet to see an indicator that literally has a green dot or a red dot. Look at this. If I put my mouse around this red dot, look at the dotted line going up. If you want to just scalp all day long, guys, go long, go short, go long, go short. I recommend you always have a stop loss. This is not a set it and forget it. When you're shorting, it's not really set and forget. What I mean by that is you don't put a stop loss and a take profit and then go to sleep or take a nap or go on vacation. That's more of a swing trade or a long-term position trade where you just plan on being in it for a while. But on a scalp, you pretty much know this is not going to last long. Generally, these scalps, I'm on the 10-minute time frame. So look at this, where this green dot was right here, 10, 20, 30, 40 minutes to the top, you get out. And then the red dot happened right here, 10, 20, 30 minutes, you get out. Green dot, 10, 20, 30, 40 minutes, you get out. This is happening relatively quickly. This is like a job. You block off a few hours. Let's say you want to trade from 9 a.m. to 12 noon, and then you got to go to your job or you got to go to your business or whatever. So you're going to trade for 3 or 4 hours. Then this is a great way to not only get experience, but start to grow your account. But you're not going to be risking a lot. But I would still, once I entered this trade right here, I would still put a stop loss right here. The reason why is what happens if there's an announcement or something crazy or a tariff announcement and we have a big dump very quickly. Market Cipher ain't going to protect you from that. It's not telling you fundamentals that could happen at a moment's notice, like a bomb dropping in Europe or, an airplane getting crashed or Trump saying something stupid or Elon Musk saying something. When they say public things like, I don't like Bitcoin anymore. Elon Musk crashed the market back in like 2022. I can't remember what it was. All he did was publicly say that he doesn't like Bitcoin anymore because it's not not good for the environment. And boom, Bitcoin dropped 20% that day. Then he changed his mind and said, oh, well, I think we got that solved now. Yeah, I think I do like Bitcoin, and I'm going to hold some of it, and I'm going to let people buy Teslas with it. Boom, it shot up 20% that day. Those are the things we can't control. But what you can control is prevent yourself from getting totally liquidated when those things happen by having a stop loss in place. So even on your scalps, yes, use a tight stop loss. You're expecting it to go up, but just in case it doesn't, you want to be protected. 10, 20, 30, 40 minutes to the top, you get out. And then the red dot happened right here. 10, 20, 30 minutes, you get out. Green dot, 10, 20, 30, 40 minutes, you get out. This is happening relatively quickly. This is like a job. You block off a few hours. Let's say you want to trade from 9 a.m. to 12 noon, and then you got to go to your job or you got to go to your business or whatever. So as you can see, this is an active way to trade. It's like a job that you could do for just a few hours a day. But if you want to learn the full system, including how to set up Market Cipher and manage your risk on these trades, I'm hosting a free training that breaks it all down. It's perfect for beginners as well, because a lot of people come into trading, they're brand new, they don't know what they're doing. We show you step by step. So click the first link in the description to save your spot. Now let's talk about how to protect yourself while you're doing this by using the proper risk management. So you're going to trade for 3 or 4 hours. Then this is a great way to not only get experience, but start to grow your account. But you do got to pay attention when you're scalping. You can't just leave your screen for a long amount of time, especially if you're using Market Cipher, because that red dot happens and you don't catch it. You might be going negative, losing all the profit you just made in this upswing, and now it's going back down to your break-even point. So if you're going to scalp, just set aside the time and pay attention while you're doing it. We had that green dot on the W, on the bottom half of the W, so it would have been a good scalp. As soon as it bounced there, look at that green dot on the wave, and then as soon as it gets over here, we have the yellow wave coming back down. This straight line right here is the center line at the 0 mark, and we have a red dot right there. Boom, red dot. That means it's probably coming down lower again. If you want to just scalp all day long, guys, go long, go short. Go long, go short. That W is somewhere in here. We go down to 15 minutes. So if you would have went long up here thinking that this is a cup and handle, and cup and handles normally break to the downside, normally break to the upside, you might have thought this was getting ready to break out. But cup and handles break to the upside 70% of the time, but they don't generally do it if they're up against major resistance in a downward trending channel. Just like W's generally break to the upside, but they don't do it if they're underneath resistance like this, but it's not. It's up against support, so that's good. So there is a chance that this can go up right here, because here's the support, and it's bouncing on support technically, right? Here's an example. Boom, little W, it went up. Little W, it could go up. It's in a downward trending channel. This is the top of the channel. It's the bottom of the channel. It's just bouncing on the bottom of the channel. And history has shown that sometimes when it hits the bottom, it goes to the top. Hits the bottom, goes to the top. Sometimes when it goes to the top, it doesn't go all the way to the bottom. It comes back and hits the top, but goes to the bottom, hit the top, goes to the bottom. Is it going to go right to the top, or is this the fake out? Because everybody thinks it's going to the top. I would wait for the top to short it rather than try to guess the bottom. Guys, learn the basics first and understand how to go long, go short, how to use proper risk management first before you start hedging. That's pretty advanced. Just think about it. You're betting in both directions. You have to understand how many contracts to put in one over the other. You don't want to do it evenly. You don't want to use the same amount, from what I understand. Whatever the least likely direction is that you think it's going to go, you're probably going to use less contracts on that one, but you're also covering your ass in case you're wrong. And then you got to know, if it does bounce and it doesn't continue in the original direction you thought, when are you going to cut that loss or take your profit if you're already in profit? Are you going to stay in them both? Do you have enough liquidity to ride it out? And so, for instance, me, I'm thinking that the bear market has a few months left. So if I shorted here and then I went long on the bounce on USDT here, I would probably close that long on the bounce as soon as it hit the resistance. I would just stay in my short. My short would go a little bit less profitable, or negative even, if I did them both at the same time. But because I'm already in the short in profit, I would just leave that, and I would just maybe capitalize on the bounce, but get out as soon as it hits the downward trending channel. So to recap, use the 10-minute chart, wait for the green and red dots on Market Cipher, and always use a tight stop loss. This is a powerful way to make consistent profits, but you have to be disciplined and pay attention. So if you want to master this strategy and learn how to use it to generate daily income, I highly recommend you join my free masterclass. I'll walk you through the entire setup, from configuring the indicators to my personal risk management rules. It's completely free and it will change the way you trade. So click the first link in the description to register. And if you want to see more live trading, check out my next video. Also, don't forget to subscribe and like. Please comment as well if you have any questions. I'll be happy to reply to you.